Richard, I mean, this mortgage war, will it actually save Fife homeowners under just about £2,000 a year? That is unbelievable. Good, that was funky music. I was getting down to that.
I know. That was different.
I mean, mortgage wars, this is it. Are we going into a position where we're going to have mortgage wars between all the different banks and building societies and lenders? I mean, in the recent financial turn, Fife residents are actually experience a wave of relief. I mean, as mortgage rates across the UK take a surprising dip. Who would have thought that? I mean, base rates haven't moved, so mortgage rates are still reducing. This reduction has actually led to major lenders signalling a potential opportunity for the Fife housing market and directly affecting homeowners, landlords, and first-time buyers in the area. I mean, let's delve into this, Richard. Let's delve into this, what it means for the local market, weighing up both the opportunities and the need for realistic expectations.
Do you know, it's like you say, for homeowners and landlords and everything alike. And it just shows you and demonstrates that you never really know what's going to happen. You can't really pinpoint it, because if we look back a couple of months and it's people ask your predictions of where mortgage rates and things are going to be, you don't expect them to have changed much, if not probably got more, probably got higher. Yeah, I had a landlord at my desk today, and they were obviously sorting out mortgage and things and telling me rates, and we were totally amazed at what they were getting offered. So it just shows you. So yeah, let's have a wee bit of delve into that today.
Yeah, I mean, right, okay, leading the charge is definitely Halifax, announced on the 2nd of January a significant 0.83% cut in its remortgage deals. Remortgage deals. So existing homeowners right now want to go on a new mortgage and their time's up and they need to go into another mortgage, then remortgaging deals are actually reduced almost 1%. I mean, a move promptly followed by other financial institutions. These cuts really are not just numbers. I mean, they translate into substantial monthly savings, don't they?
Yeah.
I mean, for homeowners especially. For instance, a £200,000 mortgage, this reduction could mean a saving of £138 a month.
Which is not to be sniffed at.
I know, 138 quid a month. What would you do with an extra 138 quid a month? And it's not even as if you're needing to go out and earn it. All you're needing to do is move your mortgage to a better rate. That's all you're needing to do. These lower rates will actually, as they become the norm, they'll herald a brighter outlook for those looking to remortgage and also those entering the housing market themselves.
Yeah.
What about for Fife homeowners? What about for Fife homeowners eyeing up the market now? What does it mean for them?
For Fife homeowners, I mean, this particularly opportune moment with rates and things, the lowered rates can be more could make transition into their new home more feasible.
Yeah.
Probably easing the financial burden often accompanying such a move. Do you know, if they're moving from one home to another, it can sometimes be off-putting because of all the financial aspects and things that are implicated in that. Additionally, previously daunted by high entry costs, first-time buyers might find the market more welcoming as well, like you said there, Jim, and spurring the rejuvenation of the property transactions in the Fife area.
There's no doubt about it. I mean, we had done previous shows that were, and Zoopla as well. They're actually seeing that first-time buyers are almost making up a third of the buyers' market now.
Yeah.
And that's got to be celebrated. No doubt about that, because first-time buyers and investors tend to be the lifeblood of that market, because it allows the person that's in that property, more than likely at the beginning of their journey, to move up to the next property up in that level. So in other words, to the mid-market. And then it allows the mid-market people to move up to the upper quartile, the 25%, the highest prices in Fife, And then it allows the people in the 25% upper quartile, more than likely because their house is too big, kids have flown the nest, and it's just the two of them now rattling about in this big house, paying for all that money, all these heating costs, all that council tax bills, to downsize to a more affordable property.
Yeah,
that's got to be celebrated. That is definitely definitely good for the housing market in itself. It's really it's spurring on quite a rejuvenation in property transactions in the area. I mean, for example, let's take a typical terraced house in Fife. In the last 12 months, terraced houses actually, on average, sold for 157,463. Now, we know you can get a really affordable terraced housing in Glenrothes, get a really affordable housing in the Leavenmouth area. You can get a really affordable housing terraced house, possibly in Cooper as well. There's some really good properties up there, round about that 150 to 200,000 pound mark.
Yeah.
Kirkcaldy as well. You know, look at Red Craigs and Black Craigs. There's really good terrace houses up there as well at really affordable prices still.
Yeah.
Even below the 157 mark.
Just going to say, I've got some stats and it takes it below that.
So what stats have you got then? You know, what have you got?
Well, if you look at, you see obviously the average terrace house in Fife over the last 12 months sold for 157,460. Yeah. So we'll say just 157 and a half. You had said, well, in Glenrothes, your average terrace house in Glenrothes in the last 12 months was 114,358.
Wow. This is where I don't understand where everybody says they can't buy a house. First-time buyers are going, I can't afford to buy a house. It's like, houses in Glenrothes on average for a terrace house, these are 2 and 3 bedrooms, are 114,000. How is that not affordable?
Yeah, so Glenrothes is KY6, KY7. And then the Leavenmouth area, which is KY8, the average for a terraced house in the last 12 months is 116,412. So there's only a couple of thousand between them. They're fairly similar in comparison. Cooper lands relatively in line with the Fife average at 157,133 pounds.
Okay, just under.
So that's just under the Fife average. And then we have St Andrews and East Neuk. So East Neuk is 192,315 pounds.
That's still pretty good.
For the East Neuk, it is actually.
That's, you know, I would typically say these terrace houses then would be Drillside.
Yes.
You know, that sort of area, ex-local authorities.
Yeah, and they're good properties and brilliant location.
Yeah, March Crescent.
Drillside's Anstruther, for those that don't know.
Yeah, March Crescent. And I'm trying to think off the top of my head, St Monans wise, where have we got there? Terraced houses. Oh, right, okay. I know where we're talking about.
Up near the fire station.
Newark, and Castle Street, and you know, all these different areas there as well. They are still all very affordable. It makes you wonder. It makes you wonder where that rhetoric and where that story is coming from. Then people keep crying out at the fact that we're first-time buyers. Do you think that is quite a valid point? Do you think it's just people grab onto a headline that they've seen in the media and immediately jump on the bandwagon and assume and get on, and it follows their belief pattern and their belief systems and the fact that first-time buyers can't buy a house in this area?
Yeah,
when in actual fact they can.
And the East Neuk in particular is always referred to in that aspect. Now, there's no denying in East Neuk there's a lot of higher-end, higher-value property, but the East Neuk, you have to remember, it's quite diverse. There's a lot of unique individual properties with characteristics and things, and a lot of things that drive up the value and where they're positioned and things. But there is still
ex-local authority flats in the East Neuk in good condition, 100,000.
Yeah,
you know, 1 and 2 bedrooms, and then you go into the houses in Rowland Street and that, and you're talking about 160 to 180,000 for 2 and 3 bedrooms. So, and that to me, a 2 and 3 bedroom is a mid-market property for a family that's maybe growing and maybe has not found their forever home yet. But it could be a family that's actually found their forever home and they've maybe only got 1 child, or it could just be a professional couple and they want home working from home. So
and that's them. Yeah.
So it does make absolute sense. There is. Do you think then it's maybe just an undersupply of these types of properties, and we probably need more of these types?
Yeah, I think your typical 2 and 3 bedroom terrace, semi-detached, or even like flat or apartment that would suit this kind of bracket. There is a very big shortage of. Even in the lettings market, I see that as the most popular style of house that people look for, or house or flat that people look for, 2 and 3 bedrooms, and there is a shortage of them.
Can I give you a
drum roll?
Drum roll for St Andrews.
Yeah. So, and finally, St Andrews, the average terraced house comes in the last 12 months at £502,906, which I thought was quite surprisingly low. I thought it would be higher.
Yeah, just say that again. 500.
£2,906.
But that's only sold in the last 12 months.
In the last 12 months, yeah.
And terraced houses could be your houses, in the most affluent areas of St Andrews, which are astronomical. It doesn't really incorporate places like Lamond Terrace and stuff like that.
And things like that,
or Lamond Drive.
You will get. I mean, these types of terrace properties we've seen at the 300 and 350 mark.
And you tend to find in St Andrews, because of the traditional way they were all built, there is a lot of terraced houses that are actually way beyond that mark.
Yeah.
And that's what will be getting dragged into that calculation to influence that so high in comparison to everywhere else. So again, it then begs the question: is like, why are they not building more affordable housing in these areas?
Yeah.
Because just to keep some sort of family connection in these areas, rather than actually decimating it to a point of just almost like a tourist destination or a university town where it's just like for students renting. And you know yourself, to disappear. Let's not go down that rabbit hole, I suppose. So let's get back to the Fife average price then, the 157,463. The mortgage on a typical 85% loan to value. So in other words, 85% is the mortgage, 15% is your money down. Would be 133,844, meaning a 15% deposit of 23,619. If a Fife first-time buyer bought their house last summer when the average 5-year fixed rate was 6.3%, wow! I never realised that. That's about a year ago. The mortgage payments would be £790.32 per month for the next 5 years.
5 years fixed, yeah.
Yeah. And at the time of writing this article, Halifax were offering the 85% loan to value 5-year fixed rate deal at 4.57%.
Yeah.
And HSBC were offering something better at 4.44% at 85% loan to value on a mortgage of that. This means
my landlords this morning, they were referring to, and they were 4.49 they were getting offered.
Wow, that's really good. Well, mind you, I'm actually fixing on 5-year deals, and I'm getting round about that rate as well. Yeah. As a landlord. This means that their mortgage payments would only be £628.46 per month. The average, here's the key here. Listen to this. The average Fife first-time buyer purchasing a terraced house is therefore saving £161.86 per month, or £1,942 £27 over a year. Now, if you extrapolate that, then, and you take that and you just calculate that out, 27 times 5. If everything stayed the same, that means they're saving just under £10,000 over the 5-year period. As you can see, the drop in the mortgage interest rates makes it quite a difference, and it'll be a welcoming saving to most Fife households in the budgets. Let's go through the numbers that you spoke about, not in detail, but just the headline for each one. The average Fife first-time buyer. So what is the average St Andrews, the average East Neuk? What are they saving over the year if they do the same thing on the average price and do an 85% loan to value?
In St Andrews, we'll start about that. So St Andrews, the average saving would be £516.94 a month. Yeah.
And what does that equate to a year saving?
£6,203.23.
Wow.
And that's over the course of the year. So that was St Andrews. Cooper was £161.52, and that was a month. And then over the year, it would be £1,938.20, which is fairly similar. We've established that that's quite similar to the Fife average. Leaving mouth, we find that the saving would be £119.66 per month, and over the course of the year, it's £1,435.92. All right, and then
That's a holiday for most people.
Yep, and then Glenrothes is fairly similar to Leaving Mouth, so it's £117.55 a month, and the annual saving would be £1,410.58.
This is why I can't understand why people don't look at their mortgage more and look at what they're actually truly paying and look at if they can get out of it to get a better deal. This is the most important thing about finances. It's not necessarily just looking at the price of the property and can you buy another property or can you sell your property. It's how much you're paying for your property every single month, especially if you've got a mortgage. You should be checking it out right now and making sure there's no other better deals, which could make a significant difference in the saving. A classic example of this, if it cost you £500 to end your mortgage right now, and it was on this sort of rate, and then change over to this new rate, you're making £2,000 a year. So the £500 would be minimal to pay the redemption and just move on to a better deal.
Yeah, so there's a lot of people might be in the mindset that, oh, well, I've still got so long to go on my mortgage, I'll have to wait. But if you've got an early release fee, check what that is in comparison to what you could save if you remortgage at this better rate over the course of, like we say here, 5 years. East Nuke, the saving over the month was £197.68, and over the course of the 12 months, it was £2,372.16. That was for these.
Again, a really good holiday for someone, all because they just moved. So if you're out there and you're kind of thinking, how am I going to fit my holiday in because the cost of living crisis, I can't afford it anymore, look at your mortgage because it's a classic one to go for, because you could probably shave thousands off your mortgage every single year just by getting the right deal. You need to speak to a mortgage advisor, though. Don't just try and do it yourself. Get the mortgage advisor to tell the true indication about what that is really worth to you in real terms, and if it is worth actually changing.
Yeah.
For me, I enjoy certainty. I like certainty. You know, as a buy-to-let landlord, as an investor, I like certainty. So I've just moved 2 of my properties onto a joint portfolio mortgage with Virgin from Topaz at an eye-watering 10.4% variable. Yep. It was because the mortgage was so low. The mortgage was so low. Yeah, Topaz Mortgage Company. So the mortgage was so low. They had actually bought it from, I don't know, from one of the 2009 crashes. They had bought the mortgage and they had increased the rates. And it's okay to me, because the mortgage, as opposed to the rent I'm getting, I'm okay with that. So, and the mortgage was so low, it was at 27,495, that you really couldn't put it onto another mortgage. So we're able to wrap it up with, because of the valuation. So they need the valuation to be over 50,000. So the valuation is now 55,000. So therefore, it's now less than 60% loan to value. Therefore, I can just move the mortgage to a better deal, whereas I couldn't before because the value of the property wasn't enough to get on a buy-to-let mortgage at that rate. But I'm able to pool them now with another mortgage I'm doing. So I'm getting the same deal for both and paying one arrangement fee in the process, which is a good saving there as well. But it's a 5-year fixed rate deal and the numbers make absolute sense for me. I don't care if mortgage rates go down. I follow the same principle as the Warren Buffett strategy, as it's long-term investing and compounding. It is not looking for short gains and actually taking a gamble on whether interest rates are going to go up or whether interest rates are going to go down. It's whether I think it's going to be a steady earner every single year.
Yeah.
That's the strategy that most buy-to-let landlords should be following. Not trying to save money on, I tell you what, I'm going to do something cheaper, and fix the property with, a cheaper thing, a cheaper product. And the tenant doesn't get as good value for money. Therefore, the tenant possibly moves out and therefore you've got a void and you lose £500 a month in rent. So every month it's empty, you lose £500, and then you have to pay a letting agent the fees. There's another £500. See how that all mounts up? All because you try to penny pinch. So that's why certainty and stability is the best way forward for buy-to-let landlords. It's not trying to gamble with the market and trying to second guess what's going to be going on. Anyway, let's come to economic indications and market predictions.
Yep.
The trend in falling rates is expected to continue. So the trend's going to continue. So they say. So they say. There's a couple of factors in this. Let's just this is what everybody thinks is going to happen.
Okay.
This is what the market expects to happen. The trend in falling rates is expected to continue, fueled by competitive market dynamics and a general anticipation of further interest rate cuts by the Bank of England financial experts. And they're actually betting on a substantial drop in the Bank of England's base rates throughout 2024. This could have been written by AI.
Good job.
With money markets believing base rates will slowly reduce in small steps from the current 15-year peak of 5.25% down to 3.75% by the year's end, making mortgages more affordable and possibly boosting the property market's health.
So,
I have my doubts.
Well, I was just going to say it. I mean, it says money markets believing that base rates. I mean, is this just pure conjecture?
This is what everybody believes if everything is equal going to happen. This is why when I predicted for the Courier and they said, give me your prediction, I basically said, if interest rates stay the same or they maybe possibly come down, if inflation starts to come down, if unemployment stays at the same level, then this is what will happen at the end of the year, between 1% and 3% rise.
But if one of these things don't go as you
However,
thought, then
at this point in time, there's pirates, yes, the wee patch pirates.
yeah,
My hearty.
yeah,
There's pirates in the Red Sea, basically hijacking our oil tankers.
pushing them
And the
south.
British government's having to step in. So therefore, they're increasing that increase for the hijack. The insurance goes up for these because they could get hijacked. So the insurance, so the costs go up, and then they have to go down by the Cape at the bottom of South Africa
to
go down to get up to Holland rather than going through the Suez Canal, which is a straightforward trip.
Yeah.
Therefore, the cost of oil goes astronomical. Therefore, petrol prices begin to go up. Now, what has led to inflation dropping to 3.6% so far is the petrol prices coming down significantly.
Yeah,
Food inflation has not contributed to that because that's at 9.2%. However, the shock announcement, which everybody didn't expect, but I did, was inflation went from 3.9 to 4% today. So inflation's gone up. Does that mean base rates will fall? Who knows? But with the recent carry on in the Red Sea, I suspect oil prices might go up and petrol might go up, and that might affect it. This is why I'm saying to everybody right now, if you're thinking of selling, you better get it done now. Because uncertainty is going on over the next 6 months could swing it the other way quite easily. And as I said before, you don't take calculated risks. You take certainties at this point in time. Or gambles, to be honest. If you wait 6 months, it's a gamble because you don't know where everything's going to be, especially the war in Ukraine and especially what's going on with Iran just now as well, because they're backing it up with the Palestinians and the Israelites, fighting against each other as well. It's like the whole world's looking for a fight.
I know. And you know, it's surprising because a lot of people, and listening to this, and I hope people that aren't quite aware, they don't think of the bigger picture, and they think maybe selling their house in Fife, all of this that's happening in the world is not going to have an effect on it, and it does.
Of course it does.
Of course, it all has an effect.
Does. Has an effect. I mean, I missed the optimism. The Fife Homeowners must adopt a tempered view. I've got to say that. Well, the cuts are actually, it could be substantial. The rates are still relatively high compared to historically low rates in the previous years. Homeowners looking to sell should be particularly mindful of this. That's the key thing to remember. Setting a realistic pricing reflective of the current economic conditions and buyer capabilities. What you could afford last year on a house, on a mortgage, is not what you can afford this year. Your mortgage is substantially lower because of the same amount of money, you'll get a lower mortgage because interest rates are a lot higher than they were last year. This is crucial to a successful transaction.
So what advice do you have for Fife homeowners and buyers and that then, Jim?
I think for those considering moving or entering the Fife property market, it's an opportune time to reassess your options. I think that's probably key here.
Mhm.
Seek financial advice, and comparing the market can ensure you benefit from the best available rates. The
Right.
market, remember, is fluid. And so stay informed.
Yeah.
And it will be vital to making financially sound and beneficial decisions in the long term, for you and for your home ownership.
Yeah.
Remember, a home is not an investment as such, because a home is the only investment a home is really is in your lifestyle and your family and everything that will come out of it. A home is not a financial investment, really. All it does is secure your place on the property ladder, and removes the volatility of swings in house prices. Because if your house price goes up, then everybody else's goes up as well. So you trade like for like when you're trading up or trading down. And admittedly, if house prices go up and you trade down, you'll probably be more beneficially better off, because you'll be selling at a higher rate percentage wise,
Yeah.
and somebody you're buying down will be selling at a higher, the monetary terms in their price increase is probably a lot less than what you got. So that's why when a market's going up and you're trading down, you benefit. When a market's going down and you're trading up, you benefit because of that. But remember, unless you go into rented accommodation at the end of it, all your money's tied up in capital in the property itself, or you decide to do an equity loan. So that's the only reason. So home ownership itself is quality of life. That's what you have a Fife home for. I mean, what would you advise for landlords when it came to this as well? Because then that takes us on to, why would you buy a house? Is a house really a good investment? So what advice do you give landlords and investors then?
Yeah, I think for landlords in Fife just now, I mean, the fall in interest rates, they herald a prosperous time for landlords. And as financial costs and things are starting to decline, the burden of mortgage and loans and things starts to diminish slightly, and then that enhances the profitability for landlords.
Definitely. Wait a minute. Are you allowed to make a profit as a landlord?
Of course, of course.
And
And
then
then
making a profit, you can't do anything, can you?
I know. And then concurrently, rents are starting to escalate at a rate starting to outpace inflation, often sometimes in areas in double digits. And that is starting to amplify income streams significantly as well. So that dual boon means landlords can enjoy reduced operational costs while benefit from increasing rental values and revenues. And that is bolstering their investment and returns. And what is technically a vibrant Fife property market.
It's a vibrant property market. This is what people don't realise. It's like I don't understand why other people have never ever seen this. Over the last 30 years, I've never had any desire to invest in any other area other than Fife.
Yeah.
Because I've always seen as Fife as a fantastic investment and a great return on investment as well. And actually an affordable price where the rent doesn't outpace people's what I do anyway, where the rent doesn't outpace substantially or take a substantial chunk out of anybody's income on average. So anybody earning the average is round about 25% or below, if not 20% of their average income. So if you take one of my properties, which is round about the 500 mark on average, because we've done this homework before, and multiply it by 12, and then you're 6,000. But if you take the average wage, the 6,000, divide it by 33,000, which is average wage apparently, and then you're only 18% of your income. The Scottish government say that 25% and above is rental poverty. And yet my average rents are actually 18% on average of anybody's income, of the average income. So, but that's what keeps me and what my portfolio and what my decisions are very, very current, but also de-risked. In other words, if it came to it and people had to cut back on their spending, they wouldn't need to, it wouldn't affect, because they'll have more to cut back on before they actually even need to think about rent.
Yeah.
But remember, please, anybody listening or watching this, the rent is the most important thing you should pay. And even the council says that as well, because it's literally the roof over your head. And as soon as you stop paying your rent, you put the roof over your head in jeopardy. And subsequently, every roof over your head that you're going to get after that, because they'll seek a reference from the people that you're with just now. That's why you make sure every single time you pay your rent, especially if you go for a mortgage now. Because some mortgage
It's starting to
companies
do
actually
that.
write to the existing landlords or letting agent and say, have they continually paid the rent all the time to demonstrate a track record? They actually sometimes use that as a track record.
Which is a
So
good thing.
if you miss your rent and don't pay your rent and you're behind in your rent, they say that's what you're probably going to do with your mortgage.
Yeah, I mean, non-payment of rent, and I mean, I've had people come to me for advice over the years, and I mean, so and so's not doing this and that, and I'm going to withhold my rent, and I'm like, don't do that, because it's to the detriment of you as the tenant. And also, like you say, Jim, and quite rightly so, there's been tenants that pay their rent on time for years and years, and then get onto the point where they're joining onto the property ladder, and they've not got any really, like, in their financial credit history, all these on time rental payments in their history as a really good payment payer as a tenant doesn't come into it, but they're starting to do that now, and quite rightly so.
Yeah.
I think also
Let's wrap up here then.
Well, just finally, I was going to say that the positive shift in the financial dynamics at the minute offers a really positive and promising outlook for existing and indeed prospective new landlords and things in the Fife area.
Well, look at there, even for landlords and first-time buyers and even upgraders, because the terraced house on average in Fife is £157,000.
Yep.
The average price of just any house in Fife is around about the 180,000. I'm just downloading the statistics now, and we're actually going to run a show this week because the new housing statistics are out for the house price index for Scotland and also for Fife as well. So it'll be interesting to see what these numbers say in the next couple of days, and I'll be doing that broadcast. But I've got a funny feeling it'll still demonstrate clearly how resilient the Fife property market is.
Yeah, definitely is.
So the recent drop in the mortgage rates, really, to bring this to a head, brings a fresh wave of optimism to the Fife property market. It opens the doors for homeowners looking to move and incentivise first-time buyers. However, we must remember a balanced, well-informed approach will be essential, with economic indicators suggesting varied outcomes.
Yeah.
Whether you're planning to buy, whether you're selling or remortgaging, understanding the market and setting realistic expectations will be crucial to making the most of this financial shift.
Yeah. I think as well that, I mean, the Fife property landscape is evolving, and with careful consideration and strategic planning, and residents can navigate through the change effectively and advantageously, and that's for buyers and also for sellers and landlords, things that I like. And if you are a Fife homeowner and landlord, or indeed a first-time buyer, and you have any questions then on what we spoke about today or the market in general, then by all means reach out to myself or Jim.
I'm amazed at how many times, Richard, that no one reaches out. It's like, it's like you've got two experts in their field, in both fields actually, because you're sales and lettings as well, and I'm sales and lettings as well. We've got both real good experience in both areas, and also in terms of financial acumen. I was an accountant by trade, so it takes, for the last 35 years. So it's clearly obvious. We know what we're talking about. And we talk about things like economic indicators, inflation, and how unemployment levels, inflation, and base rates, and other factors. Like, for example, the average wage is still 6.6%. Inflation is still 4%. So wages are still outperforming inflation, which is another risk to inflation going up.
Yeah.
Which means base rates will stay the same or potentially go up as well. So this rhetoric about it could possibly drop in the next couple of months, no way. Do not wait for this. Go now. It takes on average anyway about 4 to 6 months to get your house from start to finish and conclude and go through all the titles and actually get money in your bank.
Yeah, and actually exchange, yeah.
So don't think it's going to happen. So if you're selling right now, if you decide to sell right now, I was talking to somebody today about this, and they've actually put their house in the market because they were going to go in May, and I went, all right, you planning to move on November, like? Because it's like May, June, July, August, September, October, November. About 6 or 7 months. Yeah. So you're planning to go in autumn or just after it, coming into winter. And they went, I never even thought it like that. I said, yeah, you should be going in February to be going in about June or July, because at least you can delay the entry date. You could delay the entry date and you can make it clear. But if you tried to do it in May and you don't get the result you want and somebody wanting your house straight away, you're into winter. You're into Christmas, by the way.
Winter and Christmas time
Aye,
again. Yeah.
Christmas 2024. Never mind that, because you've waited till summer to put your house on the market. This is what people don't realise. This is why it's important to get the right advice for you, for the right property, and your circumstances as well. That is key. And divulging that and discussing that with an estate agent, or they will refer you to the right people, if it's a financial advisor you need or a mortgage broker you need, at the right time, in order to make an informed decision based on facts. Facts, not opinions that you get down the pub from your mates.
Yeah, and like you say, Jim, as well, I mean, if people are seeking advice, and if it's not to do with buying, selling, or letting your property and things, if it's financial aspect or mortgage or what, we know the right people to refer you to as well.
Perfect. And let's wrap it up there. Anyway, folks, watch out for my house price index, Scotland and Fife, coming in the next couple of days. Until next time, guys, it's bye-bye from us at Fife Properties TV.
Thanks, Jim.